Hey guys, welcome back. One of the coaches of Ungar Academy here, and this is our usual chat that we have on the weekends about how the markets have moved over the last few days. But before we start, as always, I invite you to please subscribe to our channel. Go and click on that notification bell, and hey, why not leave us a like to this video? Thanks so much. Hi, we are the Ungar Academy, and we teach traders how to make money in the markets. Our founder, Andrea Ungar, had been struggling with trading for years until he developed his automated trading method, which he used to become the only 4-time world trading champion. Subscribe to our channel for free tips and tricks. All right, so let's start as usual with the stock indexes, where we see some mixed returns over the past 5 days. In fact, whereas the European stock indexes are positive, the US indexes are negative, especially the Nasdaq, which went down by 1.7%. As for volatility, we do see that it has been decreasing over the last month, but as you can see, the percentile values are still pretty high. The 1-month and 3-month returns for all these markets, so both the European and the US stock indexes, are negative. So we can definitely say that 2022 didn't start in the best way for these markets. Same goes for the bonds. I mean, perhaps the situation here is even worse. In fact, we've seen the bonds falling week after week. And this week too. We see negative returns for the T-bond and the 30-year bond. The US 10-year bond is also negative, as well as the European 10-year bond, so the Bund, which fell by 1.6%. As for the energy sector, on the other hand, we see that natural gas went down. It was at overbought extremes, so well, let's hope that this downward movement won't be followed by another uptrend. This week, we see a decrease in the price of other energy markets as well, especially oil derivatives. If we take a look at crude oil, we see that it has lost around 10% over the past month. However, we are still at very high levels. I mean, look at the 3-month and 1-year returns. We're talking about positive 130% for natural gas, 165% for heating oil, and 80% for crude oil. And this makes it clear that there is still extreme tension in the energy market. As for the metals, we see negative returns everywhere. These markets have been pretty weak for some time, and even if they are safe haven assets, especially gold, they haven't shown any particular signs of a price increase in the last period. Well, we see mixed returns on the meats. The soft commodities are negative, with the only exception of coffee. Orange juice is still at very high levels, and the same goes for cotton. So even if they went down this week, they are both in a strong uptrend. The cereals went up quite a lot. The bean oil, in particular, has gone up by 6% this week and is now on the highs of the recent period. In general, we can say that when it comes to soft commodities and cereals, 3-month and 1-year returns are certainly very remarkable. For sure, the recent tensions deriving from the war between Ukraine and Russia are having an impact on these markets. Let's take a look at the currencies, where we have a completely different picture. We see that the color red reigns everywhere. I mean, this means that the dollar is getting stronger than the other currencies. In particular, let's look at the euro dollar, which is currently at a level of 1.0839. So not much has changed since last week. Certainly, the dollar is showing signs of strength against all other currencies. As for Bitcoin, well, nothing new to report this week. It went up by just about 1.38%, so it moved very little. It's still in its usual trading range, and we can say that the cryptocurrency market is still pretty weak. Currently, there are no signs of an imminent recovery. Well, finally, we take a look at the volatility term structure. We see that there has been an increase in volatility this week, although to be honest, it was very slight. The VIX is at 23.77, so it has a low percentile value compared to the last 3 months. Anyway, the volatility term structure is still in contango. I'll remind you that this means that the short-term volatility, and we can see it from this indicator, this white historical series, is lower than the long-term volatility. So here we have the VIX at 3 months, the VIX at 6 months, and the VIX at 1 year. So as you can see at the moment, the short-term volatility is lower than the long-term volatility, which is the classic structure of the stock market volatility when there is no tension. So at the moment, despite the war and despite inflation and fears of rate hikes, stock indexes are not particularly affected. So the VIX index and the other volatility indexes aren't suffering from the current situation. There does seem to be an apparent calm in the markets, although the macroeconomic situation is definitely not a good one. All right, let's move on to the rollover schedule for the next week. There will be several rollovers to be performed on the 26th of April. We'll have meats, soft commodities, metals, and finally energy markets with heating oil and gasoline. Then on April 27th, we'll have to roll over Bitcoin and Ethereum futures. Okay, guys, before saying goodbye, I'll leave you a link which you can find in the description of this video. I'm sure it'll be very useful, especially for those of you who are interested in systematic trading. Through this link, you'll be able to watch a free presentation by Andrea Unger, who will introduce you to his trading method, which allowed him to win the World Championships in real money trading 4 times. In addition, you'll be able to also get our best-selling book, The Unger Method, covering only the shipping costs. And finally, you'll also have the possibility to book a free call with a member of our team. And with that, the video is over, but just one more thing. Please leave us a like if you like this video, and of course, subscribe to our channel. Have a great weekend, and we'll see you again next week. Bye-bye.